Okay, and let me just get my annotation out here. And we'll get the pointer. Okay, so everyone can see. So let's kind of just start at what we were looking for this morning in the markets trade. So the one thing I talked about, and let's go, actually let's start from the point of the volume profile. And so we discussed the past possibilities where we would gap out of a prior downtrend, and then we would one of two type of days. This, where we gapped and go, right? But what I was pointing out was usually when we gap and go like this is we're gapping back up into a range, and then we tend to push higher from there, or we'll gap out of the range into new territory, one of the two. The second choice that I had pointed out today, let me see if I can find it real quick, was right back, let's see, right here. So where we gapped, right? But in that gap, there was no go. Even though we closed near the high of the day, the majority of the move, we closed right here, and the majority of the move was stolen overnight, much like we had today, right? So if you come and look over here, what we ended up having, and I said in this case, we would end up with balance. This particular day, we closed near the high end of balance, but it was still a balanced day. I don't know if everyone can see that. So if we go back and look a little bit further back, hold on one second here. Chimes, there we go. And we look at today, so drag this over. That's exactly what happened was we did, let's see if we can expand this a little bit so everyone can see it clearly. Okay, so we did gap back into what was the bottom of the prior range, right, which was right here, essentially. And we did gap and go, but we ended up in balance. We really didn't make a major move, and the reason for that was we gapped into what was previously the bottom of support, but it was also this entire area, basically from 86 down, right? This was chop city. It was really frustrating to trade through here most days. So essentially, that's what we ended up with. So what I was cautioning in the morning is, first of all, we want to look out for a gap and go, which we did end up having. And after the gap and go, the question was, would we have a high tick reading, right, followed by lack of rotation down, and then let's see, we had gap, lack of rotation down, high tick reading, and tick primarily above zero. So if we go over here and we look at the tick chart on a 1 minute, that's exactly what we ended up with, okay? So if we look, I'm going to just look on let's just look at the 1 minute. It'll probably be easier here on the 1 minute. Is that the 1 minute chart there? There we go. Okay, so if we look at the 1 minute chart, and I'm going to drag this up so people can see it a little bit more clearly. Okay. Now let's drag it all the way back to the open here. Okay, so you see the gap here, and the first 5 minute bar was solid straight up, right? And we kind of hesitated right here. And the third part was we had to clear Globex highs. So if you look right here in the first 10 minutes, right, we came right up to Globex highs, and we did not reject down. As a matter of fact, I don't even think the rotation was a point down. That was the first clue, right? Second clue is if we look at the tick, we of course gapped up on the tick, but if you look right here, here's the zero line right here. Okay, and if you look, and I said certainly in the first half hour, and for the most part in the first hour, right, we'll stay neutral to positive all the way through. So one of the clues that we actually got weaker was in the fact that we did kind of rotate down on really strong gap days. This won't even come down until about 9:30 or 10 o'clock. So you might want to make note of it just for your own trading purposes down the road, that when the tick does come down prior to 9 a.m., it's often an indication that we're going to end up with range extension, which we had, but it ends up being failed range extension, right? The next thing that we had addressed in the open, right, is that I wanted at least a 7, maybe even an 8-point rotation, right? So obviously we knew we were already going to get that off the open. So sometimes I will use the size of the gap as an indication of potential of a reversal point, but there's a couple of things that prevent me from doing that. Oh, there is another indication when you have a gap like this, and I'll switch to the 5-minute chart, but also there was no attempt at half gap or gap fill, which is definitely a sign of strength in most markets, right? So then let's go and look. As we approached, right, first of all, the rotation from the open, this right here is approximately, let's just call it 1777, right? We rotated up 8. If I want a 7-point rotation, right, if that's what I'm looking for, that means the earliest I'm possibly looking to short would be near 1783. Actually, would give me 1784 would give me a good rotation. That actually put us right in here. Let's stretch this out a little bit. That move up put us right into what was this long-term, I posted this, it was a longer-term downtrend line from the very highs, right? We'll switch to the 5-minute in a moment and we'll see that. So this is the first area, and I actually did take a shot here, and I had a relatively tight stop, 2 points. Why was the stop 2 points? Okay, so first of all, this is a great example. My trade was off plan. When I'm coaching my clients and I tell them, hey, you need to have a trade at a particular point, I'm always emphasizing trade in the zone. So I'll let my losing trade be the, not be a negative example, but be a positive example for you as to why I'm always emphasizing trade in the zone. And had I simply waited for the bottom of this zone, I had a beautiful trade coming. As it was, I ended up losing 2 points. And I did take this trade, but I took it in NASDAQ. And the reason why I took it in NASDAQ instead was simply a choice between the two. I'm always looking at the two as sisters. And I always want to date the better looking sister. In this particular case, NQ has been weaker over the last 3 days than ES has. And so I just took my shot in NQ, and it worked out profitably. Unfortunately, my profits went to simply cover my losses over here for the most part. I did end up the day slightly positive, but I had multiple clients took this trade here and also here, right? And it was a good trade. I mean, that was a very good trade. And you'll see where after 9 o'clock, generally I ignore tick divergence prior to 9 o'clock, but you can see right here, coming up into this zone, that we were clearly making new highs there, and we had tick divergence right in here. It was a great trade setup. All of them got their 2 points, right? Moving into the day, right? So now we saw it noticeably slow down. And as we move along, let's trash this down a little bit and bring it in. Again, this is all, I'll flash to a 5-minute here in just a second so you can see it. But then you can see, here's why, there's a lot of good examples here actually. Usually I'm saying trend lines are optional. They work like a highway system. People do tend to respect them, but they can also run right over them. There's really no penalty for most people trading over them, right? It's optional, and it brings down your average trade in terms of your percentage of success from where we are closer to somewhere between 70 to 90%, depending on how the market's behaving, right? All the way down to the, this trade is a 55% trade, roughly 56% trade. It does work, but not enough of the time, right? So if you look, both on the way up, look how we paused here, right? This is where I took my shot, and I would have just taken a couple of ticks. I would have been profitable there. And we paused back on the downside, right? But you can see that people who took the trade on either side of this just ended up getting nailed. And again, look at the price range, right? If you'll go back a couple of weeks ago and you'll look at this 84, 85 area, 83, it sucked. It was Chop City. It was a horrible place to place a trade, and the market has memory. And this whole thing ended up being a really crappy area to take a trade in. Now, just outside of that area, right, the first move down into the zone, I was actually looking for, I believe I posted 1779 and a quarter, 1779 and a half was the long, and I really thought I was going to get hit. I needed one more tick, and I just didn't get it. However, several of my clients did get it, and to those guys I say, good job, well done. But this is a perfect example of whether you took the trade at the top of the zone or the middle of the zone. No matter where you took the trade, you ended up getting your 2 points. If you took it from the middle of the zone, right, with the proper rotation size, you just did a whole lot nicer job. And then in the middle of the day, let's kind of squeeze over. I want to show you all just real quick what this looks like on a 5-minute, and then we'll come back to the 1 minute here in a second. Here we go. Here's the same chart on a 5-minute, and we can see that, again, just how it looks on 5 minutes. The first 1, 2 bars were solid and straight up, right? When I'm seeing a big fat bar in the first 5 minutes like this and it's shooting through a zone with no rotation down, I have my radar on for trend day up or range extension, right? Range extension, and either way, I don't want to get run over in the first half hour of the market. And I'm pretty sure I didn't hear from anyone who actually lost money this morning in this area. So really glad. This is a really hard trade to get long for. You basically had to be willing to go. We were already up 20 from the lows or 25 from the lows. And that's just a hard pill for me to swallow to get long. For those who did it, that's great. But certainly this provided great trade location once again, right? We can see how on both sides on the way up, we paused here on the 5-minute, we paused on the way back down, and then we respected this trend line, right? On the downside, it couldn't get back above it until finally we just had a fantastic trade location right here. The next area that provided trade location, we actually had tick divergence. It came just outside the back of the zone. It was over lunch. It was a little bit harder trade to take. I didn't call it out. I saw it, but I'm pretty sure I didn't call it out. And let me show you what that looked like on 1 minute, because if you'd taken the trade here at 77.50, 77.25, excuse me, at 78, 79, 78.50 to 79, anywhere in here, you made out quite nicely, right? And if I did not call this trade, however, a couple of my guys saw it, and if you look at the 1 minute, let me see if I have a comment here real quick. Hold on. If you look at the 1 minute, right, this was the second move in, right down here. Now, there's a couple of problems that I have with this move. So really, I count this as the first move in. We had a second move in. There was clearly rotations up out of here on the second time, right? So the third time in, we're sitting on this zone. The problem I had with this trade, looking at the down of the trade, was that anytime you get consolidation above a zone, it tends to be building energy, and we could have easily, and that's what I cautioned on here, was that we could easily blow through the back of the zone. It was a concern for me, and I think that's exactly what kept me from coming into this trade. But if you look at the very back, right, as we were making lows, okay, so let's get our tools out. This is where the low tick was, right? And if you look, so now everyone sees that bar because I'm going to eliminate it now. Okay, if you look, we clearly right here set a higher low. Now this is 1 minute, okay? That is super tiny, but that was the clue, right? And then we backside tested it again on a lower tick, and we held the low right there. So that was the indication that we'd held the low. They tried to break it twice, and if you'd just simply taken the lowest risk trade at the back, I did not, right? You had a beautiful setup to the upside. In this case, time of day, the amount of consolidation above the zone, lack of speed, all of that worked against me. And also considering how far we were up, right? I thought we could, the area I was really looking to get long was 1775.50, and it just didn't develop for me. And that's cool. Sometimes you just don't get those trades. But the important thing was I was already up on the day, right? And I can't stress this enough. Not taking a losing trade is as valuable to me as taking a winning trade, because when you take a losing trade, right, first you have the loser, then depending on how many points you're getting, I generally get 2 to 4 points on most trades. Occasionally I get 10 points, right? But 2 points makes the majority of my trades. So let's say if I lose, I take a full stop, I lose 4 points. I now need 4 points plus 2 positive trades plus another trade to get to the winning side, right? So that's 1, 2, 3, 4 trades that I would need to have a winner. The other part of that, let's say I only take a 2-point risk like I did this morning. So I need at least 2 trades there. I have 1 losing trade, then I have 1 winning trade. Perfect example, my 1 winning trade got me barely profitable, right? I missed my 3rd trade, so I barely ended up making any money after commissions, probably up slightly for the day. But in most cases, in most traders, because they're not disciplined and they don't have a high win rate, certainly not as high a win rate as at least I say that I have, and most of my clients get the exact same results that I have. I know that I don't want to have to work for free 3 times, right, just to get back up on the day, when if I could have been patient and should have been patient on that first trade, I would have gotten paid all the way around, right? And the only reason I missed this trade right here, I missed it for a tick. That happens. You can't cry over spilt milk. The last piece is, if you look at the end of the day, let's pull this over here real quick. Okay. As we look up into the end of the day, right, we just weren't pushing above highs. And I'm pretty sure I tweeted out, I don't recall it the second, but I'm pretty sure that I tweeted out at we needed to get above 1784 to have any shot at the upside, and we didn't. It just simply never developed. Also, if we look at NQ, and I should have an NQ chart up here somewhere. Let me look real quick. I know I posted an NQ chart earlier. Ah, here we go. Okay, after the morning time, this is a 500 tick chart to erase everything here. Okay, look at ES performance relative to ES. We came all the way back in. This is our open right here, which is, let's see, this is 8:30, approximately right here, right? We came all the way back to the open and almost below, and we were just never able to lift up. On Friday afternoon, we had a similar situation. See this right here? We were just never able to lift relative to what ES was doing, right? We came into support the first time. They pushed through the resistance the first time. We fell back below, right? And then we were able to push back down below pre-market highs, right? Globex highs. And once we were below, really there was a trap trade going. Had we had any weakness, it really wouldn't have been surprising to see us trail down into the white zone. Would not have shocked me in the least to see that on NQ. And to kind of give an example of where I got that idea that we would be weaker on NQ, and I wanted to see the strength from it, right, was if we look Friday afternoon, this area is where ES was rallying, right in here. Okay, while we were going flat to neutral here, ES was rallying up. When we broke the lows of the day, it did drag ES down, but ES was unable to penetrate its lows if you go look at the same time, while NQ was, and we never recovered at the end of the day. And really, even though we were up, relatively speaking, the strength, and if we come back now and put that in context, right, and we look at NQ, this is why in the morning when I was selecting which 2 I wanted to trade, this is exactly why I was selecting NQ to the short side, because I thought if there's going to be weakness, it would be located in the NQ easier than the ES. So that'll be something, that relationship, to keep our eyes on for the next couple of days and see if that relationship changes. I'm trying to think if there's anything else I need to see. I did want to just make a note for the overnight, right, and what we're looking at here. And if we take a look at the overnight quickly, see if I can pull that up. Okay, so let's look at the 24-hour here real quick. Okay. If we look at the 24-hour, right, and going into tomorrow, let's get rid of all the drawings here real fast. Okay, the key area that we have to get over for any more upside is really going to be right in here, right? This 1779 to 1782.50. if we cannot get above that, right, the first area of support on a 24-hour is going to be right in here, followed by right here. Okay, so I doubt that we get back down to 1780, but it's not a very big stretch, right? And obviously the 1750 is still open. One thing I do like to point out, right, overall, that if we do get above the 1792, that 1798, I don't know if y'all recall that, but it was right in this area right here. That's where we were rejecting out of prior and we were getting upside. That would be the next fat spot to take a real nice shot to a swing short, right? The other thing to look at in terms of imagining things on the trade would be where can we go from here in terms of down the road, right? And looking out even past Christmas possibly, right? And we're right in the middle of this range. And either side is still open to I mean, it would not take much either way to get a downside move back to the downside. 1754-ish was the low. We're at 1780 right now. That's 1 or 2 days of downside will get us to new lows, right? So this could simply be that we had 1, 2, 3, 4 down days essentially, although the fourth was a balance day, right? 4 down days, too many people overcommitted at the lows and they got short squeezed up. And it is totally possible that we could come back down to see these lows. By the same token, if there's still too many shorts left, and by the look of the middle of the day there weren't, right, the logical push would be back up here into this 1796 area. And if they can get above 96, there's nothing left to really hold us back above those new highs. By the same token, if we go back a little bit, all right, and we look back here, again, this is bigger picture stuff. And what stands out to me is this area right here at 1740 could get retested right down here. And beyond that, you know, it looks a little sparse beyond 1740, I got to tell you. So I'm hoping we don't have to find out exactly what it is that would happen below 1740. But when I look at the chart, an area that stands out to me is actually first this 1722 area. Right, and I suppose right there at 1730, the 1730 area we'd find it, but really 1722 followed by 1705, and then below there, you know, it could get ugly. But all of this has never been retested, and we certainly could come back in and test it. It would, if we did get down here, it would mean a 5% correction, and it's been a long time since we've had a 5% correction, so I wouldn't expect it. I'm just go through in my mind what are the possibilities up and down, so that I can stay consistent in terms of not getting caught off guard or not getting caught by surprise by a move. And this morning when we whacked down, what I was hoping for, I was tweeting last night, was that we're going to get what I was hoping was that we would open at that 1740 range, and or even into the 1753 area, right? And push all the way back up and close to 1780. I had a home run trade, at least mentally, set up there. I thought that people will be overstretched and overcommitted to the downside, but we've corrected that now. So just a couple of days till Christmas now, early next week, and we'll see what the market provides. I imagine it's going to get really slow after 10 a.m. over the next couple of days. So we got to make our money before 10 or clear out. Anyways, everyone have a great night. I certainly hope that helped people out there. You know what? I'll leave it open for a moment for questions. There's a little question machine here. We can just shoot off a question. Does everyone see it? It's right here. You just click on the little question box right there, and you can shoot a question. So if anyone has a question, you're welcome to ask. I rarely do that, but I'll go ahead and do it now. And it's even if it's into a money management area. If you have a money management question, I'm happy to answer that as well. Looks like no one has a question. Okay, well, I'll hang out for another minute if someone has a question. Otherwise, oh, there it is. Hold on a sec. It's easier than join me. Have not tried Google Hangout, but I'll take a look at it tonight. When I get back in this evening after working out, and I'll play with it and see if I can't figure it out. So it's easier than join me. Okay, does it have a recording option on it? Do you know? Okay, excellent. I will take a look at Google Hangout, and I will play with it. Thank you for that feedback. And then I can stop paying Join Me every month. And do I use do I use volume profile? Yes. Checked is the one they sell separate. It shows volume of orders, right? Um, yes. Are you talking about this chart right here? This volume profile. This is a 24-hour volume profile chart. I also use a RTH, or regular trading session hour chart. Is this what you were referring to? Okay, yeah, I do. And I use the 24-hour and the daily differently. The 24-hour, I'm really looking for where there's um, pronounced volume spikes, right? Harder when you get distribution in here. It's pretty useless, but when you get pronounced volume spikes like this, like this, makes my job a lot easier in terms of finding an area. And again, they're big areas, but they tend to help me find nice fat areas. I tend to pay more attention to the high volume areas than the low volume areas. Everyone really seems excited about the low volume areas. And the reason for that is if you're scalping, when we get to those low volume areas, it rejects pretty damn quickly out of those low volume areas. But bigger picture, where I'm looking for resistance, the high volume areas seem to help me a lot more in terms of getting over that hump where the market has to go to accomplish those things. And that's why this area tonight is pretty important. No, I pretty much, I don't. You're talking about the A, B, C, D timeframes, is that correct? Yeah, I pay no attention to that whatsoever. I know a lot of day traders think that's really important. It has no impact. And you got to understand my outlook on the market in general is keep it as simple as humanly possible. Besides drawing some trend lines and looking at tick, I go by price and price action alone. I just find that people overcomplicate it, and the reason why people want to do that is, for the most part, my experience has been, both in my own trading and in coaching others to success, is that what people are looking for when they do that is they want to eliminate the uncertainty in the market, and they think, or they perceive, that if they use those indicators to help them, right, eliminate the uncertainty, that they can make a better decision. My take is just the opposite. I don't think you can eliminate the indecision. Instead, I want to focus on the price action, the rotation size, velocity to a certain degree, right? And then if there's tick divergence or the tick reading in general, but I keep it as uncomplicated as possible, and that keeps my win rate extremely high. Do I pay attention to TF also along with NQ? I don't pay such close attention to TF for one reason and one reason only. It's hyper active in its moves, and I have certain challenges. All of us do, and we have to incorporate that into our trading. TF moves so fast that it causes me to get overactive and overinterpret the information. And again, kind of going with my view of simplicity. I'm primarily trading off of ES with keeping an eye on NQ. Because they don't trade, they're not directly correlated, right? Only in the morning, or only in a general pattern if I'm looking for where the weakness is or where the strength is. But I know TF is a leader often when we're breaking out, and I'll keep a small eye. I might pull it up on occasion just to see how it's doing, but it's just too jumpy for me. But I understand why people do look at it, and it does lead the market quite often. Do I look at DAX in the morning to E close? I do not. DAX is a wicked trader. If you can trade it successfully, kudos to you. I've seen people absolutely get just slammed and annihilated in that index, and it was enough. And I saw enough traders I really respected really get killed on a few occasions that it was enough for me not to trade it, and so I don't look at it. And I don't think you need to. I realize there's a correlation probably overnight to what the ES does relative to the DAX. But I think once the arbitrage starts between the S&P 500 index and the cash market itself, that influence kind of goes straight out the door. I start with volume profile, and I work my way backwards from there. That's actually would be quite a long conversation, but obviously I look, as you can tell from my charts, I look at the high of the day, low of the day, but to get these zones exact, and you'll notice every once in a while I'll move them wider or a little bit narrower. It's an art form. I go over it with my clients, but it takes a lot of practice. And what I encourage people to do is just start with the volume profile and start projecting, start predicting where you think the zones will be. If you're not, the one word of caution I would use is I would start doing that in a market that I don't trade in, and look at what the results are afterwards. Like come back afterwards and predict where will initial resistance be, where will initial support be. And when you're visualizing these, don't just go off the volume profile. Visualize, well, what does the rotation have to be in order to make that initial support? When I think of initial support, right, I'm thinking, where do I expect responsive buyers to step in a big way? Or same thing with initial resistance. Where do I expect sellers to step in a big way? Where are the institutions hiding in whatever it is I'm trading, whether it's gold, oil? I don't trade TF. It doesn't fit my personality very well. And so I start with volume profile. I look at the highs and lows of the day. Obviously, when you have a big fat day like this, and I combine both 24-hour and RTH sessions, so it's a little bit of voodoo, and it took me quite a while to get good at it, and I did it exactly the way I explained to you. I took a market that I did not trade. Built a chart for it either the night before or the morning of, and then I didn't look at the market. The key to it was I didn't trade off of the information that I was producing for my own chart. I went back to the methods that were working for me at the time, and as I got better and better at predicting it, it got better at letting myself rely on my own zones, and then to the point where I could teach other people both how to use the zones and over time how to build the zones for themselves. Hey, you're welcome. I hope that helped everybody. Anyone else have a question? Do you publish NQ zones in the morning? I've been thinking about it. My NQ zones are kind of, they're a little funky, I guess would be a good way. Let me see if I NQ here. I don't put much detail over them. Here it is. A second here. I day trade NQ a lot. I scalp around NQ a lot. The problem is just nailing the zones exactly in NQ is a little bit hard because just like in TF, it overshoots. And that's just a factor of it's thinner than ES is, right? And has less a lower bandwidth of participation across institutional groups, right? And when a lot of volume gets shoved through there, like it did this morning, it really, really rips. And what my finding has also been is that generally, occasionally I'll trade with 5-point trades, but my stats say consistently in terms of number of profitable trades, not in terms of risk reward, in terms of profitable trades, a 10-point stop is really what keeps me in the trades over a larger period of time. And while this morning I didn't come close to getting stopped, there's been other mornings where that 10-point rotation really saves me. The problem with that is a lot of times my targets are 5 points. And for a lot of people, that's just really hard to stomach. And you simply have to have the methodology I use for keeping track of your trades to know that you can handle that risk reward, which means you simply have to have a very high win rate if you're going to have a skewed risk reward profile. But I think a lot of people trade with the premise that I'm going to use X stop and I need a one-to-one relationship in my execution. But what they don't ever look at is what is the price of the trade actually? What is the trade demand? What is the natural rotation, right? When is it stretched and when is it extremely stretched? And finding out when it's extremely stretched relative to its average rotation, that's where you want to be entering your trades. But by the same token, what stop would you need 9 times out of 10 or 8 times out of 10 to survive the anomaly where it stretches beyond on maybe an algo fires, right? And for me, I found even when it's stretched, 10-point stop keeps me safe. And I can't tell you the number of times I've published that, hey, I'm taking an NQ trade and then I end up only using a 5-point stop only to get stopped out and watch it go in my favor. As a matter of fact, that happened to me, I believe, Thursday. I got stopped out. The market moved against me for another point. Had I had a 10-point stop, I would have ended up with a 15-point trade on my hands. Instead, ended up with a 5-point loser kind of sucked. So, oh, the white zones are highly effective there. Yeah, you bet. The white zones are effective on NQ, and if enough people ask me for them, I'll consider publishing them. But for right now, I think it'd be hard for anyone to use. The first 3 or 4 chapters in Mind Over Market, that for me, I ignore all the N and S's and A, B, C, D timeframes. But the general concept of market auction theory, where, how does the market function itself? Dalton does a great job of laying that out. His writing leaves a lot to be desired. And really, guys, that's it. Mind Over Markets. And if y'all have any other questions, y'all can hit me on email. I ran over. I got to go grab my daughter from school. She just got done with her after-school program. And I will talk to everyone else later. I have to go. Thanks, guys. Have a great night.